Hello and welcome to a video of mine. And in today's video, I'm going to be talking about, believe it or not, the stock market. So for those of you who are purely gold and silver bugs, this may not be the one for you, but I feel it's quite important to address certain things that went down on Black Monday. So maybe I'll title it Gold, Silver and the Stock Market. I'm actually a big fan of diversification, and I've been on the sidelines for a long time. Anyone who knows me knows I like my oil companies, so I've had various discussions with people about oil companies and my investment strategy. So I'm not actually a gold bug or a silver bug. I buy and sell. I'm more a coin collector than a hoarder. I like to keep things I like. I try and keep hold of things I like rather than I just accumulate it because I don't trust banks or I don't trust the stock market, etc. So I've actually been looking at getting into the market, and I was quite, I say fortunate, I was kind of unfortunate looking back. I won some money on the sports book, and I put £500 into some shares. It's probably lost about 40% now, 50%. That's okay, But I was tracking Royal Dutch Shell, and I've also been tracking BP and Tullow and Premier Oil, and they have been absolutely taken to the cleaners. If you look at the FTSE, I had a picture up yesterday, and there was one riser. It was my old company that I used to work for that runs with UNESCO. It's one of the biggest supermarkets in the world. They'd risen, I think it was like 0.26% when I looked at it. And on the other side of the coin, there was 10 companies, they'd all lost over 10% when I looked at it. With Royal Dutch Shell and BP down about 20%. Now, this is kind of great, but it's also kind of not. Like, I've been thinking about this for 4 years, maybe 3 or 4 years. The idea and the strategy that I had was if I borrow a lot of money and I end up and I put it into gold and silver and I trade it, then there's going to be a point where gold and silver will skyrocket, and equally the stock market will crash. That's the strategy I had. Now, in my mind, I was correct. My implementation of that strategy wasn't the best, and it left a little to be desired, but I did go traveling, so I can't really complain. I had some life experiences rather than just hoarding it. But I actually think this is just a start concerning the stock market. I think now is a pivotal time. I think it's an inflection point in the market, and I'm probably going to be slimming down on my gold and silver and buying up bargains. Now, I do think the stock market's going to go down further. I think there's going to be a window of opportunity, and I think there's also going to be a big recession on the cards. I've been thinking it for a long time. I've had lots of discussions with people about it. I don't think that today is a blip. I think it's only the beginning. What I didn't predict was the coronavirus. I didn't predict that Saudi Arabia, in terms of oil, going back to BP and Shell, would absolutely decimate the oil price. I think they've saw weakness in the market, and they're trying to take out some of the American shale producers. That way they can... The shale producers have really dogged the Saudi Arabians, or the kingdom, and it's been a real issue for them. Now, this is a golden opportunity in my mind. I think there's going to be a lot of companies that are priced relatively cheap. But we've had several rounds of quantitative easing, and the stock market has been put in a position where it's been a bubble. It's been a lot higher than it would normally get to due to the amount of money that has been put into the system by various governments around the world. So the US has had rounds of quantitative easing, UK's had rounds, Japan's had rounds. The European Central Bank, the ECB, they've also had rounds of quantitative easing, and it's just pushed up asset prices. Not only the stock market, it's also been housing in most areas as well. So let's put that into perspective. If you'd bought gold and silver, you'd be sitting pretty now. Now, I actually, to go back to Royal Dutch Shell, because it's my go-to company. The reason it's my go-to company is because that a lot of people don't realise that these massive oil companies are extremely diversified, not just in terms of energy. Like, for example, it's got shale, it's got various types of oil, heavy oil, light oil. It's got gas, it's got green energy on the books. They also tend to have trading floors where they hedge and they buy and sell contracts. That's what a lot of people don't realise. So when you look at a company like Royal Dutch Shell, and then you look at a company such as maybe Tullow, so Tullow's a smaller company, that's just crashed to 15 pence. I remember 10 years ago, Tullow was sitting around 700-800 pence, so £7 to £8. And the reason being, a company like Tullow, their bread and butter is to drill and to get oil out of the ground. It's not so much the case with the big boys. It really isn't. You know, they're going to be sitting there rubbing their hands because they've got small war chests, they've got various credit lines, and when the smaller companies go bust, they just buy them up for pennies on the pound. You know, they're going to do very well out of it. So, but looking at the Royal Dutch Shell price at the moment, it touched 12.50, and it's going to be going. It's jumped back up to. It's currently sitting at 13.20ish. I personally think it'd go below 10. But one thing to consider, and this is why I wanted to address gold and silver, is gold and silver doesn't pay a divvy or an interest. You know, you're purely buying it for your appreciation, or your not really appreciation actually. It's more currency going down. It's a hedge. With Royal Dutch Shell, BP, and even trackers, indices, and your blue chips, they tend to pay a divvy. You can get it from debt as well, but it's not the remit of this video. It's currently sitting at 11.267% yield, depending on what the exchange rate is, because it's paid in US dollars. Fantastic opportunity to buy. I think it's going to go below 10. I think below £10, it will make it a 13% divvy share. Now, Royal Dutch Shell has not decreased the share dividend all of my adult life, I believe. They stuck it at 47 cents, and that they've stuck to their guns. They got reserves they burn through. One of the jobs, I don't think they've decreased it in about 40 to 50 years. To be frank, I think one of the reasons you get the job as CEO of Shell is you protect the divvy, you look after your long-term holders. So this is where I'm probably going to be going. No, it doesn't matter where the oil price is going to go. They've got a massive war chest. You know, if I can pick up 1,000 shares over the next 18 months whilst the market is carnage, which I believe it will be, then happy days. That doesn't mean I'm against gold or silver. That doesn't mean I'm going to be completely getting rid of my position. You know, everything works in cycles. It really does, and gold is fantastic to hold. But if you get offered the opportunity of something that's paying, if you get offered the opportunity of something that's paying 10 to 13% as a blue chip stock, knowing that they can weather the storm and they haven't decreased the dividend in decades, it's a risk. It's worth selling up. It's selling some of your gold and silver position, in my opinion. I'm not a financial advisor, but that's just my take on it. It will get worse before it gets better. There is a recession on the cards. There is a debt bubble. But those who have gold and silver and those who have cash, I think they're going to do very well if they can sit on their hands, buy stock up over the coming maybe 18 months and just sit through what's going to come. So they're my views, they're my opinions. You know, if you disagree, please state why. You know, I'm more than happy for dialogue. It's nice to hear opposing views and opinions because it helps me form my own views and opinions, you know. So yeah, take care. Bye.